Yeah, obviously we still reside in a very uncertain economic environment, both locally and globally, but across almost every single economic benchmark measure we are looking through the eyes of to assess the New Zealand economy, we are massively surpassing expectations relative to what we were anticipating 3, 4 or even 6 months ago. If I have a look at retail sales last quarter, they've popped up, they're now tracking higher than where they were in the September quarter 2019. Traffic volumes have popped up. The housing market has literally been off to the races. Dwelling consents continue to print up around 3,000 per month, the annualised rate in excess of 35,000. A couple of big listed companies on the stock exchange have come out in the last couple of weeks with some pretty good results. In fact, they've upgraded their guidance. Government tax revenue is about $2.5 billion ahead of expectations, and that's a sign that people are still making money. And if I look at one economic indicator, it sort of sums it up pretty nicely. Unemployment in New Zealand has risen from 4% to 5.3%. Now, glass half empty is that that's still a pretty sharp rise, but glass half full, 5.3%. In this sort of economic environment is still an incredibly low level of unemployment around the country. In fact, one of the biggest problems we've still got out there for a lot of firms at the moment is actually finding staff, finding people to actually do the work. If we look at job seeker benefit numbers, the unemployment benefit, they've been pretty stable for the last 3 to 4 weeks. So it doesn't look like, on the face of it, unemployment is going to be going too much higher in the near term either. Why does the New Zealand economy find itself in a far better position today than previous expectations? There's a whole lot of factors at play, and we need to respect that the New Zealand economy took a big hit in the June quarter, 11% plus quarterly fall in GDP, which is one of the biggest we've ever seen on record, as lockdown struck. We couldn't go there and do anything. Of course, once lockdown ended or got phased out over the end of May and into June, of course the New Zealand economy, we're back into the races, we're looking at those houses, we're back into economic activity, we're spending money again. So the expectations are that the September quarter is going to have a pretty big bungee cord, or what we call the boing effect, as people have got out there and a fair bit of catch up, pent up demand being unleashed. But there's a whole lot of other factors at play. Look, hat tip to policymakers in New Zealand, this is the Reserve Bank and the government, they realised pretty early on the potential seriousness of what the New Zealand economy was going through. So they went big. In fact, they went super big in regard to the economic stimulus package that was put in place. To put some numbers on it, the New Zealand economy, GDP-wise, is about a $300 billion economy. There's $750 billion, broadly speaking, in regard to total turnover. Now, the government deployed very quickly the COVID relief package. They allocated $60 billion. About 15 billion of that was wage subsidy money. That was about protecting jobs, and it worked because jobs were protected. The Reserve Bank took interest rates down to lower and lower levels, and they've been saying we're going to keep these interest rates low for a very long time. They're partway through what's called a large-scale asset program. That's just a fancy way of saying quantitative easing, buying government bonds, and that package is up to $100 billion. They've just announced a few weeks ago a funding for lending program to lower funding costs for banks. That's potentially another $28 billion. We've had mortgage deferral schemes. Everything has been wrapped around the New Zealand economy to help it out. What we've also seen is that, look, people have been adapting. You can't travel overseas, you can't spend that money internationally. You suddenly find there's a fair bit of money in your pocket and you redeploy it locally. So we've seen a very strong what's called substitution effect. That money over winter we used to spend up in Europe, Australia, up in Fiji, it's been ploughed into spa pools, new cars. Another big factor out there across New Zealand at the moment has been the farming sector. Tourism is a very big sector across New Zealand, but New Zealand is still one big farm. The net food exports across New Zealand is in excess of 30 billion. It's about 10% of GDP. And what have we seen in the last 12 months? Well, exports have been tracking in line with 2019. The world's needed to eat. Global supply chains have been disrupted, and we've kept ours open, and we've been able to put food on the table. So we've seen food exports perform remarkably well over the last 12 months. And I think the most important thing, and we should never take it for granted, is that New Zealand has remained by and large COVID-free. But that going big and going hard has really put New Zealand in a remarkably good position compared to what we're seeing in an awful lot of other jurisdictions around the globe at present. We're expecting the New Zealand economy to maintain forward momentum over the coming sort of 2 to 3 years. Still likely to be 2022 until the level of GDP gets back to pre-COVID levels. That massages some real big differences. Yeah, some sectors are back at pre-COVID levels already. If I have a look at the international tourism sector, it's probably well beyond 2025 before that sector will get anywhere near back to levels it was pre-COVID. So that's what's called a little bit of the K or the wedge shape, big dispersion between what parts of the economy are doing what. Good news is that New Zealand government debt levels are incredibly low. Government debt at the moment is around 30% of GDP. That is world class at the right end of the spectrum. So if something else does come along, say COVID comes back and we've got to get into another lockdown, the government's got an awful lot more money at their disposal to push through another wage subsidy and get the economy through those difficult economic times. If I'm looking at the New Zealand dollar at the moment, we're seeing the New Zealand dollar is squeezed up, particularly against the greenback. A couple of reasons for that. Look, one, the US dollar's been coming under a little bit of pressure. Secondly, look, the New Zealand economy looks better. Commodity prices have been pretty buoyant, so I'd expect the New Zealand dollar to remain pretty vibrant over the coming 12 months against the greenback. I suspect it's a little bit of a different story against the Australian dollar. Your near-term risk profile thinks up. Higher Kiwi Aussie dollar, because the New Zealand story does seem to be a bit more resilient, robust at present, but at some stage late 2021, 2022, I think you'll see the Kiwi Aussie dollar come back down a little bit, emphasis on a little bit, as that Australian economy comes back on track.